Hello, and welcome to this week's Motor Trade Radio podcast. Powered by Motors and Kazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters from across the franchised and independent dealer sectors.
Well, it's been a busy week of podcasting, hasn't it, Phil? Because, we did the weekend show, obviously, last Saturday, but between then we've recorded a supplier special and also an interview show with friend of the pod, Steve Young.
Yeah, it's been a busy few evenings trying to get these things edited and done, but no, it's enjoyable. But I think you're right. And we always say it and we should stop saying it, really. And it's also been a bit of a busy week in the headlines as well. So yeah, it's non-stop at the minute, and January is soon disappearing.
Yes, the clock is ticking down, isn't it? The supplier special. I mean, we posted that. I think it was on Tuesday, and that's generated a lot of interest. So that was with Impel, who are the US-based business which has been using AI to transform car buyer customer journeys for over a decade now. And that in the States, they work with some of the biggest dealer groups, growing itself into this $1 billion turnover business. So huge presence in the States, but they've also been very active in the UK over the last 4 years or so. And we caught up with Matt Muhlenberg, who's the Chief Product Officer, and James Lees, who's the UK Managing Director, to really find out more about its dealer proposition and how it's rapidly growing its presence in the UK, where it works with a growing number of AM100 groups. So we'll have an extract from our chat after the midway break in today's pod. As I say, we only posted it early in the week, and it's generated a lot of interest with listeners.
Yeah, no, they and the guys there have got behind, obviously supporting that as well through the socials. So it was a great chat, and I say as Curtis said there, we'll have an extract shortly in today's show at the midway point from that longer interview, but that will be on your podcast feed, as Curtis said there, from earlier in the week, and very worth the listen to if you do get the chance to have a listen to that. And this week we also caught up with our friend of the podcast, first for this year, with Steve Young, the industry analyst and MD at ICDP, and also in 12 months in now nearly, MD of Auto West London, which seems to be a busy modern JQ site in Chiswick there. And we spoke to Steve about some of the car retailing stories making the news this week, as well as his experience as a retailer over the last 10 months now. And as the business obviously kicks off its first full calendar year as an operation here in the UK.
And next week, do look out for our forthcoming interview with CAP HPI's Jeremy Yeh. Now, Jeremy will be talking about the trade value trends that shapes January and give it an outlook for February and hopefully Q1. So that'll be in your podcast feed early next week.
You're listening to all the chatter that matters on the Motor Trade Radio podcast, powered by Motors and Kazoo. If you're a supplier and would like us to profile your business and reach our audience of dealer group bosses, managers and decision makers on one of our supplier special episodes, then get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Companies already featured in our supplier specials include Prospecting Dynamics, iVendi, ETT, Generational Tracker, and Jigcar, and you can find them all in your podcast feed. But if you'd like us to profile your business, then just message Philip or myself on LinkedIn.
You're listening to all the chatter that matters on the Motor Trade Radio podcast, powered by Motors and Kazoo.
Headlines this week come from car dealer, AM and broker news, starting with Stellantis boss claims car makers are burning cash on incentives as there is no natural demand for EVs. Dealer Auction has revealed what it expects to be the used car margin top performers for this year. Motorpoint rolls out nationwide EV battery health test certificates. Peter Vardy Group returns to profit as decision to exit most of its car dealerships starts to pay off. And we finish with the dealer group that misplaced a new car in group stock for over a year.
Yeah, we'll get to that one there at the end. But yeah, as Curtis said there, we're heading over to car dealer and very much Stellantis speaking out now about the impact of EVs on their operation there. They're saying that Stellantis boss claims firms are burning cash as there is no natural demand for EVs. And this is from the Stellantis European boss, says that EVs are leaving no room for profit, and that Emmanuel Capellano, I think, says that car makers are having to choose between paying fines or losing money, and the EV campaigners say inflation is the main reason behind firms shrinking profits. So not holding back there in terms of from a quite significant manufacturer on their view towards the probably the ZEV mandate and the challenges here in the UK.
Yeah, it's pretty forthright stuff, this, and do urge you to check out the full story. But you know what, Phil? If only we had someone at the Stellantis dealer conference.
We did, yes. And, so that's you're right. We before we get on to the story, we did as Curtis referenced there. We caught up with Steve Young, as we said right at the start there, and part of the chat with Steve was basically talking about this story as it hit the headlines. But as it so happens, Steve was actually at the conference this week. So let's listen to that interview there with Steve now.
Earlier this week, the Times reported that Stellantis' European boss, Emmanuel Capellano, said there is currently no natural demand for electric vehicles in Europe. And he actually went on to clarify that by saying demand only arises when there are subsidies in various countries or when car manufacturers reduce prices by burning cash. So a pretty damning view there from him. How would you assess natural demand for EVs in Europe and the UK? And do you expect it to shrink or grow this year?
I think that I had the privilege of being invited to the Stellantis dealer conference, investor conference last week, and they, they're talking. They've got a good story to tell. In terms of what they're trying to do to strengthen the various brands, but particularly around electric vehicles, electric cars, and they. In a general theme across the sessions I went to was that they were offering price parity or close to price parity on BEV and ICE. So it takes that element out of the discussion, and it means that it's a very straightforward, simple offer without saying, "Oh, well, we'll subsidize it, we'll discount it, there's a special promotion this month," and so on. But we don't know what's going on in the background in terms of the burning cash comment. We don't know how much it's costing Stellantis to do that. They've got a strategy which seems to allow them to flex the production, which is a good thing, rather than having the dedicated BEV platforms and production lines and supply chains and so on. Undoubtedly, they're making less margin on BEVs, and maybe they're genuinely subsidizing them. I think probably it's just a lower margin than they would like and they ultimately need. But I think there is natural demand. There's lots of surveys around, including our own, which show that once people have an pure electric car, then they tend to repurchase pure electric. They like the experience, they enjoy it, they understand the reality of owning one, as opposed to some of the tabloid press, hype about, battery fires and lack of charging infrastructure and so on. And if you're in the right place and have you the right driving pattern, the right usage pattern, then an electric car is great. And I think the natural demand is there and it will grow, but it is at this stage a lower margin than the ICE products, I'm sure, because different stages in technology curve.
Interesting point there that Steve makes about the price parity that Stellantis are putting into place across their numerous brands, so price parity for EVs and ICE, which is it's a real issue facing pretty much all the legacy brands, isn't it?
It is, yeah, and the point's made there. Where they have a choice, don't they? Either pay fines or throw money at the market to entice or discount to move the product into the sector. And I think clearly, we spoke about it. Or I got on me high horse last week about it when the Z mandate driving the wrong behaviours. But obviously, this is coming direct from them OEMs that it's fundamentally it's not working. And there's comments in here talking about that we are an electric vehicle brand first, and then we will launch our WEV, which is the range extended electric vehicle. Fundamentally, they are electric, but saying that most of the Chinese brands have kind of done it the other way around, even though everyone thinks they're all electric and they are not. And that's the point that we've made before.
That is a really good point, isn't it? Because the assumption is that these emergent brands are totally electric. But, as we know in our conversations with many of these emergent brands, certainly plug-in hybrids play an important role.
Yes, a significant share of the volume is going through some kind of hybrid technology, not just pure EV. So it's I think it's right that it's spoken about and raised, but whether something will be done about it, we will see. We say great interview there with Steve. That's just a small snippet of things that we did cover with Steve, and that was on your podcast Thursday morning of this week. So I would urge you have a listen to that. Talking about some of the dynamics of the market from an OEM level, but also he's 10 months in as an MD of a car retailer down in London there. So don't miss that one.
Next headline is from AM, and it is Dealer Auction highlights used car margin performers for 2026. Definitely worth having a look at this story in AM because it is quite detailed, and it does talk about the various models that have been highlighted in Dealer Auction's retail margin monitor. And what they've done is they've looked at the best performers over the course of 2025 and highlighting them as cars to consider as we go through Q1 and the rest of this year. But what struck me was the number of sort of mainstream brands and volume cars that appear fairly high in some of the categories. Certainly the sub £10,000 categories. So the Peugeot 2008, for example, delivered the highest margin for cars priced under 10,000, and it was followed by the likes of the Ford Kuga, which was actually top of the chart in 2024, and the Nissan Qashqai, which was also the fastest selling model in the top 10. And the annual analysis tracks the highest retail margins achieved on used vehicles bought through the Dealer Auction platform. So it is quite a useful snapshot of where margins are sitting.
Yeah, it is, and they also indicated in here is they're looking at obviously the variance of those, as you say, those price brackets. But interestingly, all the challenges that JLR have had over the year of 2025. But when it comes to used SUVs, premium SUVs over that 10,000, then the Land Rover Discovery Sport led with an average of 3,850 margin, followed by the Range Rover Evoque at 3,575 margin. And there is a comment in here from Kieran Taboon who's the marketplace director there at Dealer Auction, saying this report is a brilliant gauge of long-term trends, but it is important to look at the most up-to-date insights to stay ahead of the curve, and the monthly variations reinforce this. So really, kind of indicating how important this kind of data is to understand those vehicles in demand, but also where those profit opportunities are for that product as well.
Yeah, definitely. And it's just worth adding on this that for the first time, fuel type has actually been added to the data to reflect the growing presence of hybrids and EVs, meaning some models appear more than once, but it gives a more sort of accurate summary of where they are by fuel type. So definitely worth checking out that story.
And heading over to broker news, and this is that Motorpoint rolls out nationwide EV battery health test certificate. Now, you may remember on our supplier special, Oliver Philpott from Generational, it's them who are supporting Motorpoint with this, which is great news, and congratulations there, Oliver. Great opportunity there for Generational. And Motorpoint in this proof of concept that it's good, saying that generational EV battery testing technology will be used across 21 Motorpoint stores, and it's 2 dedicated preparation centres. Testing of more than 1,500 Motorpoint vehicles revealed an average battery health of 96.6% across both EVs and plug-in hybrids, and 97% of EVs tested show battery health above 90%, with 30% scoring over 99%. Isn't that about 100% then?
Yeah, nearest damn it.
But no, I mean, it's great insight, and I think we talk about state of health and where it sits within that retail environment, but this surely is giving the Motorpoint consumers, the buyers, confidence in their product.
Yeah, definitely. I mean, and as you say, it's great news for Generational, very, very much a startup who are focused on delivering these battery health check certification for EVs, and signing up with Motorpoint. I mean, you couldn't actually want for a better partner in the independent used car sector in terms of sheer volume of vehicles. So this is really going to certainly raise the profile of the whole certification process. And worth pointing out that Motorpoint itself, it has expanded its EV operations, and this new partnership follows a successful trial across more than 1,500 used EVs and plug-in hybrid vehicles that have been tested nationwide. So this is where all those stats that you mentioned, Phil, came from, and it does actually show that the battery life of the bulk of vehicles was certainly over 90%, and probably higher than the sort of the more common public perception.
Yeah, and there is a paragraph in here saying a generational certificate provides verified information on a vehicle's battery condition, its real-world range and remaining warranty, and that the latest data from Generational's rollout shows that battery health vehicles tested with its technology sold 4 days faster than untested EVs, up from 7.3 days last year. And there's a nice little quote that they've put in here from Oliver from a tweet, or should it be an X now? I'm not sure how you do that one now, but it's down as a tweet. Sorry, Elon, if we're not referring to it as an X. But battery health is fast becoming the new mileage in the EV era. Buyers want clarity and confidence, and our technology enables industry-leading retailers like Motorpoint to deliver that in minutes. So a nice little sort of acknowledgement there from Oliver at Generational with that new incentive there initiative at Motorpoint.
We've got the rest of the week's headlines in the second half after an excerpt from our supplier special chat with Impel's Matt Muhlenberg, Chief Product Officer, and James Leese, UK Managing Director.
You're listening to All the Chatter That Matters on Motor Trade Radio, Powered by Motors and Kazoo. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media.
Welcome back. So Impel's been very much at the forefront of delivering AI solutions to dealers in the US for over a decade, but AI is very much a broad catch-all term. So we asked Matt Muhlenberg to describe the differences between automation, generative AI and agentic AI, and what it all means to dealers.
And AI is a broad category of capabilities where computer chips are being used to simulate intelligence. And the idea of automation that started years ago, decades ago. It was, how do you basically identify an intent of a customer and then have a pre-scripted response that is going to go back to that customer based on what that intent was. Those were the really early days of AI, and there's still a lot of examples of those that exist out in the marketplace. The reality is they don't generate a very good journey because they're so scripted they can't really flow in a conversational sense with a consumer. Generative AI is the thing that hit the news big about 4 years ago now, when OpenAI announced ChatGPT 3.5 in November of whenever that was, and suddenly the whole world was aware of the capability that existed. Generative AI is really interesting because it's using prediction of what the next set of words are based on massive amounts of data. And it uses that to then create conversations that flow as though you're talking to an individual, putting words together in the right ways and right patterns to answer your questions, to address the topic you're raising, to advance a conversation somewhere else. Agentic AI is really just an approach to how do you do generative AI. We used to build monolithic agents that had the skill to do everything in that job. There's challenges that come along with that, because when you're building something large and monolithic, it has the opportunity to get distracted or to hallucinate or to go down the wrong path based on the massive amounts of data available to it. Agentic AI is about containing that. It's about thinking about lots of really specialized and skilled agents that have access to a narrow set of things and a narrow set of capabilities that interact together to collectively create a conversation that is powerful and impactful for the consumer.
Let's take a close look at the role of Impel and can play in lead generation and lead management. And, we're touching on what you've both been saying throughout this. Dealers thrive on leads. But landing that initial inquiry is only one part of it. It's only the start of that inquiry. I mean, how does Impel use AI to help dealers keep customers' conversations moving so more leads can turn into genuine sales opportunities and conversions, essentially?
I mean, it starts with just timeliness of response. As James talked about before the break, these leads come in 24/7. And if you're there to engage that customer within minutes of that lead hitting the dealership, well, that creates opportunity for a conversation to happen in the moment for that consumer when they're thinking about it. So I think that's really important. I want to go one step above that, though. Also, when I think about chat on the dealer website, it's an opportunity for the dealer to take anonymous customers and turn them into leads for the dealership as well. And dealers that take these chat tools that are driven by an agentic agent and integrate them into the calls to action on their website, they see a tremendous lift in the amount of conversion from website visitor into hand raiser that wants to talk to the dealership. So it's not even necessarily about the leads that have already come. It's the leads that you want to create, the customers that are there anonymously browsing on the digital showroom who have questions, who want to engage. And if you can think about the website and how to orchestrate those call to actions so that instead of being a form fill that pops up or some static information that pops up, and you transform that into a dialogue that's happening right there on the website, it creates a huge amount of incremental opportunity for the dealership. When you partner the human with the AI, you're driving a much better experience in its totality.
Bringing that to life in the UK is that what we're seeing is about, we talk about 50% being about the technology and 50% about the people, to Matt's point. And actually in the UK last year, we trained over 910 people in the dealerships that were rolling out the AI. And one dealer we worked with, we came up with, it was a really good initiative where to get that balance of human and technology, actually, and you'll hear this a lot, is people, they name their AI. We always say, what do you want to call your AI? In most cases, it always seems to be a woman's name. But what tends to happen is, and what we've seen is that in one particular dealership, this particular AI, Anne, what they did is we created a persona for Anne. So within that dealership, if you walked into any of their sales rooms or where they have lunch or tea or coffee, you'll see a poster on the wall that says, "Hey, I'm Anne. I'm your digital assistant." And it will say, "These are the things I'm doing for you. So while you're sleeping, I'm nurturing your leads. While you're busy, I'm answering these questions. So I'm doing all of this for you, but this is what you need to do for me. So please, don't interrupt me when I'm having a conversation with the customer. Make sure you're giving me the right information so I can always be updating the customer." Various things like this. So it actually feels like it's part of the team. And we go into dealers now and we talk to them, and they'll talk about Anne. "Oh, Anne's doing a great job. You know what? She's managed to get us this amount of appointments and leads." And in fact, in one dealership, they've actually got their AI listed under the salespeople, showing how many appointments and demos they're booking.
I mean, I just found that such a fascinating conversation, that we had with James and Matt, because not only, I mean, as that excerpt demonstrates, not only did they explain the tech behind AI, but very much the sort of practical dealer applications. So I sort of came away from that conversation with a much clearer idea of how AI can work in the showroom.
Yes. Yeah, how dealers can engage with it, how they should be thinking about AI and where it sits within the sales process or the inquiry process, where that's in the sales of vehicles or through the servicing department, etc. So no, I think it was a great chat with both Matt and as you say there with James, and really Matt, and you need to listen to the full interview from earlier on in your podcast feed. But Matt sort of giving the differences between some of the AI technology, how it's evolved, how it's changing, and how it works. So if you haven't listened to that full interview with Matt and James, I do really urge you. Even if you're not in the dealer space, if you are interested in AI and how it's changing, how it can be integrated, if you want your own Anne working for you. When you're not working, then do have a listen to that full interview there with Impel's Matt and James.
So going back to the headlines and heading over to car dealer, the headline there is Peter Vardy Group returns to profit as decision to ditch car dealerships start to pay off. So probably worth them just giving a bit of background on this story before we look at the financials, because Peter Vardy was certainly one of the fastest growing groups when it first launched, operated across Scotland, initially representing Vauxhall and then taking on the likes of BMW, Mini, JLR, and in more recent years, Moda, JQ, and Aura. And it also operated a number of cars branded supermarkets, which really started to utilize some of the Vauxhall sites that it exited from sort of mid 2021. But it's actually sold in 2024 most of its retail operations to Parks Motor Group, and it closed its Cars supermarket in 2023. So as the business stands today, it operates two Porsche sites in Perth and Aberdeen, and has this growing car money consumer finance business. So that's the context behind the results.
Yeah, and they say within that as well, they also closed its Flex Auto, which was a leasing business within the operation there. But as I say, they've made all these changes, and Peter doesn't stand still. We know that. Continually thinking of other things, where we can move the business, how we can diversify and move that operation on there. But I think they've turned it into profit with all of these changes, and I think it's now looking at what they do next. And so they did all right. I mean, the directors' remunerations totaled 845,000, up almost 70% on the 316,000 that was paid last year, although that did include one extra executive there. But they did very well. I mean, cash available to invest also increased from 3.7 million to 41.8 million. It's a bit of an increase there, Curtis, on cash.
Yeah, and I guess the headline figure is the small pre-tax profit of £18,000, which is in this extended 15-month financial year to the end of March 2025. But that's against a pre-tax loss of £10.9 million in the previous year. So turning that loss into a small profit took some doing, I would suggest.
Yeah, definitely. So it's the full story in a little bit more detail will be on your newsletter on Monday morning. And the final story of today is the AM Online. Dealer Group misplaced a new car in group stock for over a year. And this is that a large UK unnamed dealer group successfully tracked down a new car that had been lost in its group stock for over a year after using inventory review technology. This is, I think it's from a cancelled order on a new car that subsequently then kind of got missed.
Yeah, it disappeared into the system for 400 days, and it was a £40,000 vehicle. So, as you say, unnamed group, unnamed car. So no one's being named and shamed in this. But when I saw this story, I thought that there's going to be dealers certainly listening to this, dealer bosses, sales managers, who will be wincing because they will probably know how easy this is to happen, how easy it is for vehicles to sort of slip through the cracks, despite the amount of tech that's being used by dealers across the UK, DMS systems. I mean, you would think that tracking vehicles would be easier than maybe it is. But this story, as you say, really highlights what happens when it does go wrong and presents this albeit extreme case. But the story was released by Autofinity, whose VI Hub, vehicle inventory management and publishing platform, was used and tracked down this missing car. So there was a kind of happy end to this story, but 400 days in stock for a 40 grand car, that's you're talking about a significant loss there.
Those that have been in the industry for long enough, probably not the first time or the last time on this, and it's so easily done. I mean, this is a slightly different one with this cancelled order, I think where cars get moved from site to site or used as a collection or drop-off vehicle, etc. It's a constant battle, and there's always systems coming up to help it. But like you say, this car being on stock for over a year with a £40,000 cost, then there are other costs involved with that as well, probably interest on that money and everything else. But showing that how easily it can be done, and obviously that this vehicle was lost for over a year. Be interesting if ever does a leak of who it was and what car it was, but maybe we'll never get to find out, Curtis.
Yeah, we will never know.
We will never know. But hopefully, a few headlines, big headlines there for the week. Great interview, as we said earlier, with ICDP and also West London. Steve Young, always fantastic value, always very insightful. So do have a listen to that on your podcast feed. And as I said, if you're interested in AI at all, and how it's changing, how it can be integrated into business, then do catch up with the full supplier special interview there with Matt and James from Impel that was on your podcast feed earlier on in the week.
But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. We're back next week with that interview with Jeremy Yeh from Cap HPI. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast. powered by Motors and Kazoo. We'll be sharing all the URLs from this week's headlines in our newsletter on Monday morning. To subscribe, just search LinkedIn for the Motor Trade Radio podcast.